Good morning, everyone. This is Amit Pabari, founder and managing director of CR Forex. In today's presentation, we are going to discuss why we feel that 95, 80, 96 is going to act as a strong support for rupee, and rupee is likely to move higher towards 97 to 97.5 kind of levels. In the coming week, Fed policy is there. 6 months back, everyone was expecting that Fed is not going to increase interest rate. In fact, everyone was voting for rate cut. But in June policy statement, we were astonished to see that out of 18 members, 9 members have said that they will go ahead and increase the interest rate in 2026. So currently, the entire market is expecting that on Wednesday or Thursday, the Fed is not going to go ahead and cut interest rate. In fact, there's a 36.5% possibility that Fed might go and increase the interest rate. If not in July, but definitely in September meeting. Why there is a sudden shift in the view? Because market is expecting that inflation will be a main concern in the US economy as crude oil prices are trading near 100 levels. Second, knowing Kevin Walsh's statement for last 20 years, he is someone who believes that Fed should reduce its balance sheet size. Indirectly, it means that he wants to reduce dollar liquidity from the global market. But Trump wants to reduce the interest rate as US debt level is increasing. So in next Fed meeting, it is important to understand how Kevin Walsh is managing both the aspect. So probably he will be sounding bit of hawkish in his statement. Now let us understand what dollar index chart is suggesting us. Dollar index chart is suggesting that 100.65 is going to act as a very strong support for dollar index. Any hawkish comment from Fed can take dollar index higher towards 102.50 to 103 kind of level. If dollar index moves up, it can create pressure on all emerging market currencies, including rupee. Second concerning point is oil prices. Apart from Strait of Hormuz, now port near Red Sea has been also blocked, which will increase the transit time of oil ships and reducing the supply of oil mainly to Asian countries. While I am recording this video, there has been news that US had not attacked Iran from last 2 nights, but saying that Ukraine struck 2 cargo ships and 1 missile boat in Caspian Sea, indicating that Iran war has been combined now with Russian war, indicating that escalation is there. There is no sign of de-escalation. And the last point is August seasonality. If you see the chart, it is giving us a clarity that out of 18 years, rupee has got weaker 13 times in the month of August. And whenever there is a global crisis at that point of time, rupee has got significantly weaker. For example, in subprime crisis time, it has got weaker by 3%. In taper tandem quantum in 2013, it got weaker by 8.36%. On an average of last 18 years, it has got weaker approximately by 2%. Now let us discuss the outlook on rupee. From 94.30, our stance has been very clear that rupee is likely to get weaker and rupee has come towards 96.5 kind of levels. In the current scenario, most of the factors like hawkish Fed, rising geopolitical tension, plus August seasonality. Apart from that, RBI sold position of 106 billion. These are all points indicating that rupee can move towards 97 to 97.5 kind of levels in coming days. However, any news on de-escalation can provide some kind of appreciation by 30 to 50 paisa, and the pair can take support near 95.90 to 96.20 kind of levels. But those opportunities should be used by importers to increase their hedge ratio as the overall view of 97 to 97.5 remains intact. With this, I would like to end my today's presentation. Jai Hind, Namaskar, फिर मिलेंगे next week. Thank you.